Hello, my dear friends. Punarvas Jayakumar here. How are you? So, guys, as of today, the Finance Bill 2023 has been passed by the Rajya Sabha. It was passed by the Lok Sabha. It is done by the Rajya Sabha as well. So, I am here to explain to you in a very quick video the most important changes of the Finance Bill 2023. There have been some amendments that have been made also from what we saw in the budget. So these changes very quickly, and the material impact is what we need to understand. So before that, please like this video and share and subscribe to my YouTube channel as well for regular updates on corporate law and economic laws, and of course direct taxes now. So first and foremost, my dear friends, most important change is the withholding tax, that TDS, that is on royalty and fee for technical services in the international taxation regime. What used to happen was it was 10%, whereas the other treaties also had around 10 to 15%. That basically in international taxation it should be the income tax rates in force or the rates as per DTA, that is double tax avoidance agreement, whichever is more beneficial to the SSC. So India was always, though the treaty rates were around 10 to 15%, India was able to levy only 10% because of the rates in force. So that has been changed now from 10%, it has now been made 20%. So this withholding tax rate raised to 20% from the existing 10%. So now what has happened was, especially for example, DTA with USA, let's say it has a rate of 15%. So earlier what was it? Rates in force in the Income Tax Act 10% or the DTA rate 15%, whichever is more beneficial. Obviously I will pay 10%. But now with the rates increased to 20%, what has happened now is India will be able to levy the rates which are there in the double tax avoidance agreements, let's say 15% for US, UK, etc. So earlier it was unable to levy this 15% because the domestic tax rate was 10%. So even non-treaty countries now will also face the higher 20% withholding tax. So that is one huge change with respect to royalty and FTS, that is fee for technical services. So second one, there has been a tedious obligation that has been created on winnings from online games. So basically there are online games. Online gaming has become really big source of income for people as well, especially after COVID. It's all started with this Ludo game, if you remember. And after that, there are so many online games now, Texas Hold'em, poker, so many things, and people are winning a lot of money. In fact, I have one of my friends, relatives who had lost so much money in online gaming. It had become an addiction. So government, Nirmala madam is taxing that also now. TDS obligation on winnings from online games, it was effective from 1st July 2023. Now it has been pushed back. It is now effective with effect from 1st April 2023 itself, my dear friends. So that is the second part of the story. Third one, as regards PCS was concerned, if you do not, file the return of income, or if you do not pay the TCS, and if you do not furnish PAN, for example, the rate was the TCS rate or 20%, whichever is higher. But now everything has changed. For some cases, it was lesser percentage also. Now everything has changed. Now the maximum rate that the government can charge was 20%. So the TCS rate, the higher rate, has been capped at 20% now. It has been capped at 20%. So that is the TCS obligation. Fourth one is the maturity of units of debt-oriented mutual funds to be taxed as short-term capital gain. So this one, debt funds lose the LTCG benefit. So no LTCG benefit for debt funds with less than 35% in equity. So these are predominantly debt funds where the funds are invested in debt securities more than equity. So basically the overall cap of equity investment should be just 35%. So if more than, let's say, 65% is being invested in debt, it is called as a debt oriented fund. So for them, income from debt funds now will be taxed at the normal slab rate of the taxpayer. So basically a lot of money will flow into the banks now because people will divest from this, saying that anyway it's the same rate. So I was investing in debt funds only because I was getting the LTCG benefit. So basically now there's a parity in taxation with respect to fixed deposits. Whatever the fixed deposit interest you will get, the same tax rate will also be, the normal slab rates will be levied even for debt funds. This is applicable prospectively from financial year 24. it will definitely hit investment in debt funds, and banks could definitely see lot of inflows. That is one part of the story. It is similar to the regime earlier proposed for market linked debentures. It is similar to that is what the government has done. So 4 changes, basically 6-7 important changes are there. Now, tax exemption to Sikkimis individuals. So earlier, anybody, from the, when the ascension happened with respect to Sikkimis, everybody who was a Sikkimis or who married a Sikkimis or domiciled in Sikkimis, there were a lot of exemptions given in 1026 AAA. So now what has, there were a few things. One is, if you are a Sikkimis married to a non-Sikkimis, it was not done so. Second, even if you are domiciled in Sikkim, which means if your house in Sikkim, but it is not entered, your name is not entered in the register of Sikkim, Sikkim domicile register, then also this benefit was not there for you. So there were many representations made to the government and made to the concerned ministry, etc. But nothing happened all this time. Whereas one Supreme Court decision recently said that if you are domiciled in Sikkim and even if your name is not mentioned in the registry, it's okay, you should get the benefit. Otherwise, it is of course completely against the Indian constitution. Similarly, if a Sikkimis person marries a non-Sikkimis and they're domiciled in Sikkim, the benefit will have to extend to them. So based in line with the Supreme Court decision, the law also has been changed now to, there's basically a wide base whereby all the Sikkimis individuals will be getting the benefit under the tax exemption. That is the point. Then of course guys, there is increase in STT, securities transaction tax on the sale of options and futures. So if you see here, security transaction tax on option sale has been raised to 0.0625% from 0.05%. So STT on futures also raised to 0.0125% from 0.01%. What it means is definitely it will impact F&O volumes and F&O exchanges for sure, because now the STT has been increased. So last change is, of course, there has been a marginal relief which has been provided, introduced by resident individuals who are under the new tax regime 115 BAC for net taxable income exceeding 7 lakhs. For exceeding 7 lakhs, there has been a new calculation that they have proposed. If you see, this is how it is. So if you check that, if my income is, let's say, 7 lakh rupees, then tax liability before rebate under section 87A, the new clause has been inserted, 25,000 extra is what they are giving. So in this example, let's see. So total income is 7 lakh, the tax liability before rebate is 25,000. So any income which is in excess of 7 lakh is nothing there. So excess of income, tax over income 25,000. So now you are getting a rebate of 25,000 rupees. Next net tax liability after rebate before cess is nil. On the other hand, if it is 7 lakh 10,000. So the tax liability is 26,000, and what is the income in excess of 7 lakh? It is 10,000. So 26 minus 10, you are getting excess of tax over income is 16,000. You are getting a rebate of 16,000. So the maximum rebate limit has been fixed to 25,000 rupees. This is the extract of the entire amendment which has been made and an analysis of the same. But 7 lakh 20,000 rupees, let us say, the tax is 27,000 rupees, whereas the income in excess of 7 lakh would be 20,000 rupees. So what is the excess of tax over income? 7,000. So the rebate also you will get up to 7,000. Similarly, 7 lakh 25,000. If that be the case, your net tax liability would be 27,500. Sorry, income in excess of 7 lakh is 25,000. So the difference 22,500, that will be the rebate. So 7 lakh 27,780, slightly higher. And what is tax liability? 27,780. Income in excess of 7 lakh is this much. So obviously in this particular case, you will not get any rebate. However, if it is 7 lakh 30,000, my dear friends, 28,000 is the tax liability. Excess of income over 7 lakh is 30,000. So it will become, it will come as minus. So obviously there is no tax rebate. The gist of the story is the tax rebate has been capped at 25,000 rupees. So basically, if you are earning anything equal to or less than 7 lakh rupees, you will be getting a tax rebate under the new regime of 25,000 rupees. So these are all the various important changes, where the material impact, however, would be in these areas: debt funds, 20% withholding tax, and 25% higher STT on F&O transactions. So we'll be analyzing more and more in the in our ensuing classes. So all the best, guys. Take care. Please keep an eye on the channel for good updates. Take care.